And welcome everyone to another crypto market update. We are currently live on YouTube as well as TikTok. So we'll wait for maybe a few more minutes here to let everyone else roll in. Going to be going over some news first and then going over the price action of BTC as well as some other alts. We will be looking at gold, oil, and the SPX as well within this video. So we'll be covering a wide range of asset classes. But first, we're just going to slowly let people come in here as they roll through, and then we'll be able to get this video going. So, as people come in, the first thing we're going to be looking at is the news here. We see from March 14th, so I guess start of today, Ripple Court ruling May expanded legal action potential against crypto. So Ripple's in some trouble in a court ruling there. If you want to read more about that, Bitcoin and gold are doing the same thing in coronavirus crisis. Pomp, he is a what you would call not a market leader, but a figurehead or in some sense, a person who would be a person who would have information regarding potential Bitcoin news, and he's a well-regarded individual within the space is basically what I'm trying to say. Bitcoin price squeezes above 5K as analysts forecast a squeeze up. Yeah, so personally, I am going to be making completely my own decisions. I somewhat agree with this. BTC bounces above 5K analysts. So we are in a squeeze right now, and that's what we're going to talk about within this video. Last time we dumped it was on a weekend, so I wouldn't be surprised if we do see a bit of a squeeze back up on the weekend. So I am closely looking at the price action here, making sure that we are going to get a good entry. We do have a resistance around $5,600. If we're going to get above that, pretty good opportunity for a long there in my personal opinion. And then some more interesting stuff. Bitcoin miner stumbles upon $8 million stash from 2010. Sells before crash. Lucky dude. Robinhood outages during historic price action sparks. So yeah, this is why we're teaming up with Webull as well. You see Robinhood malfunctioning and not being able to provide consistent service for their traders. So Webull is another alternative that we are able to provide. And you get 2 free stocks, so that's pretty phenomenal. Not much more here. Cryptocurrency news from Japan, if you wanted to learn more about that. COVID lock exploits coronavirus fears with Bitcoin ransomware, so not good news on that end. But not anything crazy. We do have an entire section here dedicated to COVID-19 discussion. So if anyone has any information regarding updates within their country or just maybe personal stories or more general, we like to talk about it here. It's very, very active. There's a lot of individuals talking about different topics related to COVID-19 around the globe. So if you're interested in that, definitely check that out. And like always, we do post stuff about BTC and the overall markets, stocks, gold, all that stuff. So we will start off with BTC, talking about that squeeze a little bit earlier in this video. Also, before we get into the market updates here, looking at the charts, just a quick little note. If you do have a question, we will be answering all questions at the end of the video. So if you have a question, leave it within the comments and we'll be sure to get back to it at the end of the video. But we do want to go through all of these charts here in kind of one fluid go. And then at the end, we will go and discuss any questions and kind of have a little bit of a Q&A time. So this is the 15-minute chart. We will go back to the daily just to discuss where we currently are, where our support is. We've already discussed it before. So where I currently see the price right now is we are holding a level of support, which is around, let's say 5K. I'm just going to make my cursor white instead of red. So this is around that level of support. We see candle closures at that zone. So if this was the candle, we see that the wick is protruding below the zone, but it's holding at our support here around the 5K zone. And then we see a wick protruding below this area. But for now, we are holding, we're consolidating. We had a massive move to the downside, and now we're kind of consolidating into a range here, and it's just a matter of if we're able to make a higher high and then a higher low, thus getting us out of our range, or if we're going to dump back into our support, continuing the range to the downside. So we'll see how the price action goes within the smaller time frames, and we have our level of resistance at around 58. So right now, in my opinion, the range that we're kind of bouncing from is between 5K and 5,800, and that is our current consolidation point, just looking at the daily. And we have our far range with our wick touching sub 4K, but we do see that there's a key level of resistance right there around 41, 4K-ish, maybe even 42, but like around that zone. And then it depends on each exchange, right? But we're looking at the previous resistance of the market structure back in late 2018, start of 2019, and then we do see it was a support here yet again. So if we do see the price hold down below this zone, that could be the new support. Overall, in terms of bottoms, I'm not going to say, yes, 100% this certain price level is going to be the bottom. That is dangerous. That is not a game that we play. We look for price action confirmation. We look for market structure. We're not randomly just assuming that, for example, this low here is going to hold just because it's held in the past. We're not in the market to do that. We're in the market to try to find high probability situations using the three pillars that we have, using market structure, price action, and VSA. And talking about VSA, incorporating the volume now into the one-day analysis, we see that there is a tremendous amount of volatility. Now, look how much volume that has taken place within the last 2 days compared to basically all of 2019 and what we can probably safe to assume most of 2018 as well. So we haven't seen this much volume in the markets since the dump below sub 6K in 2018, which was very significant. And then before that was basically at the end of 2017, start of 2018, when that capitulation of the parabolic move started coming in. And that was the end of the bull run. So that's a massive amount of volume. There hasn't been that many trading days with this much volume, for 2 years now, basically. So it's very, very significant, and it just shows that we are in a very important zone. In just terms of volume, for people who don't understand VSA, this would be climactic volume because this is ultra high volume, and it doesn't mean that this is going to be the lowest point that we're going to hit, but it is a climactic point within the chart that is going to signal that it has made the push, or has made the push to the downside, and then now we could be seeing a potential correction. Now, it's just a matter of, okay, now are we going to be going and still making lower lows and lower highs? Let's just talk about market structure a little bit, because right now, after our making our bullish push to the upside here, we started making lower lows and lower highs, right? This is a high, this is a low, this is a lower high, this is a lower low, this is a lower high, this is a lower low. Now, we did break this previous high here, and then we made a correction, breaking the market structure, and that's what we traded here, and that's where we traded the $7,800 zone all the way up to around the 10K here, 9.1, 9.2, somewhere around there. So that was a good move, and then it changed direction right here. But when we broke this zone, we changed direction again to make this channel here like so. So right now, we did get a fake out with this break, but we're still, in my opinion, in a good position to be holding this potential descending zone like so. So now, in my opinion, we could either be seeing the price respect this confluent zone of a resistance and then coming back down here, or we're going to see a higher high, higher low formation, and that could be a possible entry in terms of the longer term overall time frame. So let's just draw in that other line, that descending trend line, like so we get a good understanding of where our resistance is. So that's the overall daily chart that I currently see in the markets. We could draw another descending zone like so. This would be kind of the last zone that we would need to pass before we start looking a little bit more bullish, like so. But right now, we're all the way down here, right? So we just hit a major key level of support. We're consolidating. If we do make a push up or an attempt of a push up, that is definitely going to be our first zone of resistance that we're going to be wanting to look at. Also, just looking at that level of support right here, turning into a potential new level of resistance. There's going to be some level of confluence zone around $6,500, as we can see on the daily chart. We don't really need this, so we're not going to even incorporate this into the chart. That's just what we're going to incorporate for now. We got our support zone right here. We got our resistance zone from the descending trend line that we connected the lower highs with. We broke and then we came right back down. Sorry. And then now we are range bound with our resistance at around 58 and our support at around 48, maybe 5K. Excuse me. And then at this point, we're going to see how the consolidation is. If we do break that $5,800 level of support, which we'll talk about, we could see a bit of a push up here. So, you know, these don't seem like crazy moves, but if you're just getting a move from a break from this line to our next zone of confluence, that's a 10 or 12% move, right? So in terms of risk reward, if you're risking 2%, 3%, even 4% if you're getting 12, that's a 3 risk reward. That's a pretty good risk reward. So the opportunity is definitely there if it does present itself. If it's a high probability situation, then we would be looking to enter. So right now, that's basically the analysis on the daily chart. We're just within a range here. I don't really want to do analysis too much on the BLX because we still have 17 days until this closes. We could get a sharp move to the upside, just leaving a wick. That would be pretty bullish. But I don't want to say it's completely broken because we haven't closed. And on the CME futures, on the Coinbase exchange on the weekly, I would want to see this close until we actually say that I want this to close before I confirm and use this candle to do my analysis, basically. So we'll wait one more day until that, and until then, I'm going to use the daily to do my analysis for this weekend here. So basically, we talked about the daily. We can go to another daily on the Heiken Ashi candlesticks, but there's not a whole lot to talk about. On the 4-hour, we see that it's just in the consolidation, not really giving us momentum. And on the daily, obviously, the momentum is still to the downside, showing strong bars, pretty bearish bars there with a lot of volume. Less volume coming in the second candle, but obviously that is a surge of sell volume coming in after that massive dump to the downside. But it's crazy. I personally did not expect that. To be completely honest, I'm not going to say I lied, and I was expecting that bearish move. 7,800 to that zone, not a problem. That was accounted for, but breaking 7,800 in that fast of a move was a little bit surprising for me for sure, but you know, it happens. That's not a problem. We managed to get a nice short from around this zone downwards on an alt, but overall, we're just letting the price action tell the story, and we're going to follow. So I try to think of trading kind of like, I'm not a dancer. Like I don't dance or anything, but in terms of dancing, you would look at it as the market being the leader and you being the follower. So the market takes the lead in the dancing, and you are just trying to understand what the market is doing and following what the market does. And it leaves breadcrumbs where it'll give you hints as to where the price could go using market structure, VSA, and price action. And you got to use the breadcrumbs and use them to formulate a story. And that's the story that is going to lead you towards finding high probability situations. So in that said, let's talk about the story right now in terms of the 4-hour chart here. Oops. So we're going to really focus on A, the volume, and B, the price action. Obviously, massive bearish move to the downside, but look how much volume there is picking it back up. So that in itself is climactic volume, because we see more volume here on this candle, not by much, than this candle, right? And it turned green. So there was sellers that pushed it all the way back down, but buyers pushed it all the way back up, much higher than the open. And then the next candle was pretty dang bullish, which was this candle here with a long wick to the downside. So just in terms of the candles, look at this dump there was not a lot of buyers around this zone because it dumped, it closed there. The next candle was very, very limited amount of buy pressure compared to the amount of sell pressure coming into the market. And then we didn't really see much wicks to the downside, no major aggressive candles, not really showing signs of bullish pushes or bullish pressure. And then we got another dump down because the sellers still had control. And then at this point, just in terms of candles, now we're seeing the bulls start really, really attacking the price, buying up the pair, entering the market around these zones. So that is good to see. And at this point, we are seeing a low, a higher low, higher low, higher low, higher low. So we're seeing higher lows coming into the market, holding a horizontal level of resistance around $7,800, right around here. So we're making these higher lows and we are squeezing into the market sort of like that. So we're making not a straight line of higher lows. We could draw an ascending trend line of higher lows, but we're getting kind of like a looping, slowly weakening uptrend where it's not a strong uptrend. It's kind of weakening, but we don't exactly want to 100% enter short because we know that there's a strong level of demand right around here. But in that said, there could be a possibility, obviously, because it's weakening, to have another attempt to make a push to the downside. And then if it doesn't actually push and make a lower low, then we could be making a potential double bottom. And then that rejection from the buyers could then create a higher low, which then could maybe potentially start that higher high in the higher low formation. So we don't exactly know what's going to happen in terms of market structure. We don't want to give too much bias as to where it's going to go, but in short, on the 4-hour, we see a horizontal zone of resistance. We see a move that is pulling the price up, making a lower high, and it looks like it's weakening with the price kind of curving, making less higher lows, which is bearish, or it's a weakening bull market. And then we could see another move down to make that lower low, or if we break that resistance, we can make a higher high, and then we could look potentially on that higher low. We'll look on the 1-hour chart, but that is overall the 4-hour outlook that I currently see within the market. I am using this as a level of support, but I am being very cautious right now because it's very volatile. It is squeezing, and we can see that on the 15-minute and the 1-hour chart. So the 1-hour chart gives a good explanation as well, and it gives a good illustration as to how that squeeze is looking. So it's pretty well respected. We see an anchor point right here. We see 1, 2, 3, 4. So on the resistance side of things, it's well respected. It's a dependable zone that we're holding. And then on the support side of things, we do see 2, 3 zones here. It's a little bit messy around where the anchor point is exactly, but for a potential dump, I am looking more at this zone here because we've been holding it for a while. If it goes below that zone, I think it will potentially make that lower attempt to make the lower low, at least testing this low to see if we're able to get the bears to push back over, or if there is more bullish pressure, we'll hold that second low to potentially make that double bottom. But if that's the case, that's great. Let's just take another snip to discuss kind of the potential opportunities we have within this squeeze. So the market has to do something. The price is coming closer together. I am respecting this descending zone more than the ascending zone just because it's a little bit more respected. But overall, we are getting a squeeze. We're literally right at the apex, so we have to do something. And the market either is going to make a move to the upside, which is going to make a higher high here. And it's just a matter if we're going to break this resistance zone, or if we're going to come back here, get stuffed, and then we're going to come back down, maybe hold this zone. And then if we break down here, well, then that would be a good short opportunity. But if we break the resistance, in my opinion, it's not a prime long opportunity because we see a previous level of resistance and support very, very shortly above the break, which is right around here, around $5,800, $5,900. We can see that is a key level of resistance. So if we do break this little zone, we don't have a whole lot of room here until our key level of resistance. So we'll see how the price reacts around this zone. If it breaks the descending zone, we'll still be looking to just patiently wait and see how the price reacts when it's still pressing up against the resistance. If it does break up above the resistance zone, well, that to me is a confirmation that we've made a higher high, especially if it holds the zone. We've rejected multiple times before below that zone, giving us confirmation that the sellers are present within the area. So if it does give us a higher high here, yes, we would be testing this resistance, but if it's able to hold that higher low formation, then I would be looking more bullish at it, and that could be a possibility of an entry here, especially with the confluence zone of the ascending zone and the horizontal zone. If we see VSA check out in a bullish situation as well, that for me is price action, market structure, and VSA, and it would be a good opportunity. So that would be a potential long opportunity. For a short opportunity, even if it breaks this descending zone, like I said, I'm looking at the horizontal zone. So even if it breaks here, I'm still unbiased, patiently waiting. Now, if it, let's say, breaks here and it kind of travels kind of closer to the apex, and then it breaks the ascending zone, holding our horizontal level of resistance, that for me is a potential short opportunity where I want to look to enter. Stop losses above the major level of resistance that we see, and then stop losses are at major levels of supports, mid-range zones and supports within the price action. Probably going to be 4,800, and then the final one's probably going to be at 43, testing the previous low, as we can see within the current price action. So basically, if it squeezes down, we're going to test these lows, in my opinion, so we're going to try to capture potential profit from that area. If it breaks above, we're still wanting to see if it's going to break this horizontal zone of $5,800. If it does break $5,800, then we're looking for a higher high, higher low formation where we're looking to enter on the higher low once we have confirmation that there's bulls within the market. So to put it simply, that's how we're going to be trading the markets. Ethereum is still below its resistance. We'll go over the different alts, but the main thing we're going to be looking at is going to be BTC, because that's going to be the market leader, and we're mainly going to be looking at that to give us the indication of which way we're going to be trading. So that's basically the price action for BTC. You know, I don't really think that's a move that we're wanting to take for a long, but we will see how the market goes. I think I will just change where this ascending trend line is a little bit, just so it's like here, and then I'll put a projection on it, just so we're giving that room like we want, kind of like so. So overall, we're going to stay patient with it, but it's looking like an opportunity for us to capture a potential squeeze play. And I will just incorporate this up here, like so. Just so I know that this is a resistance zone and I'm not looking to long until it really breaks and validates that it's above that area. So we're within a small range right here, and I'm just waiting for the price to break out of the range. So that is the completion of the BTC market analysis. We just went over two different scenarios, two different setups that we are looking for to capture both a downside move that would potentially test these lows again if it does break the squeeze here, if we're making lower lows, breaking supports, holding resistances, seeing more volume distribution, seeing no demands within the price action, which if this does close, it could be a no demand. We're not seeing a whole lot of no demands right now, but you know, if we do break below and then on the pullback, if we're seeing decreasing buy volume with no demands, that could be a good opportunity because it's a confluence zone. And then on the upside, we're not really looking for any longs until we are able to break our key level of horizontal resistance at around $5,900. If then that's the case, then we were looking for a little bit more long bias, but at this point we're still consolidating. I think we are still going to consolidate sideways, which could then mean that we're going to potentially try to play the shorting near resistance and then capturing profits near supports. And if it proves wrong, then so be it. We don't have an entry yet. We're waiting for confirmation. We still got a decent amount of time because this is the hour chart, so we're in no rush to enter the market because there's no need. And we're basically just waiting for our really good high probability situation to come to fruition before we look to enter into the market. So Hope you enjoyed it. For all the Performante Premium members, we will be posting exactly when we're entering if we do enter. I will be pretty active within this weekend as well, because last time we had a dump, it was over the weekend. So I'm going to be a little bit more free with my schedule and just kind of stick around home so I can take action if need be. Now we're going to go over the different tools that we're going to be using to assess the supply and demand. So in short, we're seeing a huge shift here. So we did initially have a very significant uptrend where we're getting a lot of people to enter longs. But at this point, we broke below our major structural support. At this point, we've broken below it. The confidence is now lost for the bulls. Not completely, obviously, but in terms of the confidence we had at the start of 2020, the momentum we had, the feeling of not euphoria, but the feeling of the market being more bullish, the market moving to the upside, holding supports, breaking resistances, making higher highs and higher lows. That confidence is now completely gone, and there's really a lack of buyers wanting to enter long using margin on Bitfinex. There's really not a lot of people, and now we're within that range that we were playing in for basically all of 2019. So it's not looking phenomenal for the bulls of BTC, although if we do break above, that could be a good sign that we could be starting this trend again. But at this point in time, there's no real sign of any recovery from the confidence for the bulls. We will need to see a lot of momentum to the upside to attract a lot of the buyers. I'm sure there's a ton of people that got burned. If not, they're just long-term hodlers and are really upset that the market dropped literally 50% in a matter of days. Obviously, no one's going to be happy about that if they're investing. But I think I will do another video talking about more of the macro trends that we're seeing, how you do see a deflationary period in commodities and precious metals and safe haven assets before you see the price appreciation. So, it's aggressive, obviously, in terms of the pullback, but gold's looking at a similar pullback in terms of the direction. In terms of aggression, BTC obviously has a lot more aggression, but it's not like gold's going nowhere. Gold's going down too. So there's no real reason to think that Bitcoin is in a completely opposite position. Gold's way more established. It's an $8 trillion market cap asset compared to BTC's like 250 billion. Like, not a whole lot, right? So it'll move a lot more, which makes sense. So to end it off here, for the shorts, obviously we see an increase in short activity. We're still at the high here where we've seen before, so we're not going to say that shorts are having total control of the market. We're kind of in a mid-range zone where bulls have definitely lost a lot of control and a lot of confidence, but the bears haven't gone up to the area where they're shorting like they were pre-bull run of 2019. Mini bull run of 2019, let's say, where they had a lot more confidence really attacking the price. But once we broke, let's say 10, 12, 14K, basically it was a major short squeeze and a lot of people had to get it out of the market. And now the shorts are now getting back into the market, which is great for a potential long opportunity, because if there's no shorts in the market, it's hard for the price to kind of make a parabolic move unless there are two things: major bull market, or there's short sellers that are having to get out of the market. But if there's no short sellers, there's not a high probability of us making a parabolic strong move to the upside unless it's just natural pressure from the buyers. But if we do see a lot of sell pressure and a lot of short sellers within the market coming in because of the bearish move, if we do get some momentum to the upside, a lot of those short sellers are going to have to get out of the market, potentially creating a short squeeze. Now, what is a short squeeze? Great example is Tesla. Look what happened. There was a lot of people shorting Tesla when it was within that range. It's been holding in for years, sub 260. And then there's a lot of people shorting it and made a move to the downside. A lot of people attacked it because, things weren't looking fantastic. Elon Musk made tweets. He thought that was going to go private. Like, there's a lot of things that kind of brought Tesla's price down a little bit in comparison to what it is now. And then a lot of short sellers attacked it. And then once the price started to climb back up, when you're in a short position, you have to buy back to exit your position. You have to purchase the stock or the asset to get out of the pair or the position to settle your debts, so you can pay back whoever you borrowed from, and then you settle the transaction. So when you see increased short seller activity, it's going to provide a potential opportunity of a short squeeze if we start to see momentum to the upside. Now, that's a big if. It does also mean that there's confidence. So if there is a push to the upside, there's going to be short sellers attacking it because there's more confidence, there's more people opening positions for shorts, which, is a little bit contradicting to what we said, but there are times when it just pumps. Like, look at October of 2017, late October of 2017. We moved 40%. No one could have, well, some people could have predicted. I didn't exactly predict that massive pump to the upside. I don't think many people did, but it can happen. And if there's a situation like that, a lot of these people who open short positions are going to get absolutely wrecked. So they need to get out of their position, aka buy it, which means that it's going to appreciate the price even more. So definitely something to think about, definitely something to understand. Last thing we're going to be looking at is going to be the BTC longs and shorts for the different markets, different exchanges, not just Bitfinex here, but seeing the longer term trend and kind of the price action throughout history is a really good way to analyze it, not just the day-to-day 1 hour and 24-hour timeframes. It's really hard to understand the relationship throughout time if you're just looking at it day by day, but if you're able to see it in a more visual, long-term chart, obviously it's a lot more beneficial for the reader because they're able to make correlations, find key levels of support and demand, all that stuff. So the final thing we're going to be looking at for Bitcoin is going to be the different exchanges and seeing that 24-hour and 1 hour percentage of the buyers versus sellers. So on BitMEX, a little bit more towards the sellers, 50.26, so not a huge discrepancy. Binance, a little bit more towards the buyers, but same thing, not a huge discrepancy. And Bybit, very, very similar. So on the 24-hour timeframes, it's pretty even in terms of the buyers and sellers. The battle is pretty well even on the 24-hour timeframe. So within that 24-hour timeframe, it's about 50-50, let's say, for the buyers and sellers. So there's not a huge discrepancy. In terms of the 1 hour chart, it is a little bit more short heavy. We're seeing on BitMEX 52.5%, Binance 54%, on Bybit 51.4%, all short-sided. There's not a huge, like 2.5%, 3.5%, 4.5%, so it's not a huge discrepancy, but it's definitely a little bit more short-sided. Something to note on these shorter time frames, but on the larger time frames, on the 24-hour, we're seeing it basically pretty even, where it's almost a 50-50 break-even situation for Bitcoin. So we'll see how the price action goes. We're not really going to be looking to take action just yet. We already have a plan that we've discussed within this video. So that was the BTC market updates. I will drink my coffee, and then we'll go off and do our another analysis. All right, so what we're going to be going on to do is a real quick look. I'm not going to go over the weekly, monthly, all that stuff. A quick look at gold on the 4 hour. We did break below our support at around 1550. Like I said, it is a zone, so we haven't closed this daily yet, and we could climb back up into above this level of support. Obviously, that was a pretty major rejection because we do see that BTC made that rejection as well, so it's somewhat comforting knowing that Bitcoin is coming down the same as, or gold is coming down the same thing as Bitcoin. Next key level of support, if it does break that 1550 level of support, is going to be around 1450, 1460. As we can see, that's going to be our next level of support. If it does break that zone, we got our next area of 1380. If that's a pretty far drop there, but we'll see where it goes. We're gonna not really trade gold, but look at gold while we are trading BTC because it's good to look at other assets that have potential similarities in terms of the characteristics that they hold, aka being a safe haven asset. But it's more just for observation and understanding the overall market and what other assets are doing, because it is important, especially now because there's so many things moving. There's so much activity in the markets and all financial assets, not just stocks or bonds or crypto or commodities, or really everything is moving so much. So there's a lot to potentially capture, but then there's also a lot of risk in the market. So it's a very interesting time. And I wake up every day very excited. Let's just say that. Now to US oil. Currently sitting at around $33 after that gap down. We are consolidating with the high around 36, low at around $30. So we're kind of hovering within a $5 range here since the 9th, and we'll just see where it goes. We are holding these higher lows, so that's not ideal if it does break that zone. I can see that right there. We'll see where it goes. Like there's basically a key zone of supply, key zone of demand, and we're just playing within that range. So if it breaks the level of support, we could probably get it dumped back down, and if it breaks a key level of resistance, well, we might be able to fill that gap there. Who knows? But we will be kind of looking at this and covering this very shortly, as we kind of did right now. And the last one we're going to be looking at is the S&P 500. We can see the last time it was opened on Friday, it finally finished off with a very, very strong bullish move. Surprisingly, while the president was discussing the nation in national emergency, the market started to pump up, closing that gap that happened around 272, as we can see, just making that gap close. But with the entire country being in national emergency, with a lot of people not going to work, not going to restaurants, not going to NBA games, not going to other events, any real events where there's large groups of people, I think the market definitely is going to go down further. Definitely, obviously it's my opinion, but just in terms of how much the coronavirus is going to impact the market, looking at how many industries are going to have to get helped, assisted, bailed out, whatever you want to call it. Look at the airlines, look at the tourism, look at the cruise ships. No one's going to be going on cruise ships. No one for 60 days, right? So everyone working on a cruise ship, the people actually running the food, the entertainment, the actual cruise ship, cleaning, the captain, managers, administration, HR, everything is completely shut off. So what do you do, right? And that's one sector, and there's multiple sectors. And looking at the complete shutdown in China and how that's taking a ripple effect in terms of the supply chain and how it's shutting down a lot of the production for a lot of the just simple products and the things that you use every single day, right? So there's going to be a ripple effect in terms of the economic halting that we are doing in terms of not just US but globally. But so I think the carnage will continue, and we'll see how BTC reacts. I do think that, looking and trying to understand previous monetary history, there is a previous deflation, looking back at 2008. I think we will look at that and actually make a video about that a little bit later in the video. But we will have a deflation, not always, but there's a deflation before the potential hyperinflation that could come through because of the overreaction and the increased printing of money due to the overreaction. Look at right now, President Trump said that he just was able to get another $50 billion from a fund because of this national emergency. And he also said within his speech that he is able to help out all these different people suffering from the coronavirus, and that's just all money being printed. They are now in quantitative easing mode, not just the US, but the ECB is, Japan is, all these countries are now printing more and more money. And people are flocking to these interest rates for the T-bonds that are outrageously low. People are so pessimistic about the economy that they're willing to get paid 0.8 or some crazy absurd yield for a 10-year treasury yield. That's nothing, right? So that just shows you how pessimistic people are for the foreseeable future here, which is not looking good for the stock market. It's not looking good for the overall economy. And, we have been speculating that BTC, gold, and silver will get some significant buy pressure. And I think this dump will be kind of the final dump here. So, BTC is on a huge sale. And I know people saying, oh, you always say sale, and if it goes down, obviously it's not a sale. Then 100% that is true. But looking at the overall market, looking at the overall structure of the price action on the monthly chart, it's not too obscene. And looking at where you're averaging in from at these points, in my opinion, that's a pretty dang good risk reward that you're looking at for where you're entering at around a sub 6K zone, with the things that are happening within the global macro space, with the things happening in terms of the potential inflation that could occur in many, many countries because of the mass money printing, because of the complete halting of the economy. The government is going to have to try to stimulate the economy 100%. They can't just do nothing about it, right? People are not going to jobs. People are not spending money. There's no real economic activity going on in many of these countries that are getting affected, and US is up next. That's going to have a tremendous impact on the global markets, and it'll be interesting. And we're going to try to capitalize on that. So enough about the S&P. I'm really interested in following global macro and the news happening. So I think we will incorporate this a little bit more within our videos. It does take a little bit more time, but like I said, we will timestamp these videos. So if you're wanting a quick look at the S&P for more of the global macro, kind of overall US economy outlook, go there. Quick talk about crude oil, quick talk about gold. I think it's a good way to incorporate different news outlets into a single video. So we're providing more value, more education, more information, and our perspective in a same video, in a same format content that's able to really effectively give you our view in a quick, fast-paced, digestible way to kind of explain our view of the market. So hopefully that gave you a little bit of insight as to what we're thinking in the markets. And then now we're going to go on to the different alts within the market that we're seeing right now. For the main part, in my view, I'm mainly looking at Bitcoin right now because it's a very volatile time. We are seeing massive swings both to the upside and downside. And in my personal opinion, it makes sense to trade the asset that has the highest value or the highest direction rate, in a sense, if that makes sense. So Bitcoin's kind of like an index, whereas the alts could be considered as potential individual stocks or small caps, where whatever Bitcoin does, almost all the alts will follow suit to some degree. And if the whole market is going down, more people are going to be looking at Bitcoin compared to the alts, because Bitcoin is the safest investment within the cryptocurrency space because A, it has the longest history, B, it has the most adoption, it has the highest market cap, it's lived the longest, it's the first main cryptocurrency, and there's a lot of reasons why why Bitcoin is the king of the market. It has by far the most amount of dominance, it's like 67, 68%, something like that, so it's going to move the market more than any other alt, so it just makes sense to look at that asset, Bitcoin, compared to any other alt, and that's currently what we're doing. In a more speculative market where there's a little bit more greed, there's a little bit more buy pressure, there's going to be more aggressive pumps with alts, which provide more opportunity in terms of ROI, but in bear markets, to me, it makes sense to kind of lean more towards BTC, trade BTC. It's very liquid. It's going to provide liquidity kind of no matter what, compared to some of these other alts. Maybe they don't have as much liquidity, which isn't ideal. You might get some slippage. You might even just miss your stop loss altogether. Obviously, that would be very detrimental, but overall, we're just taking a step back and waiting for the price to kind of give us a direction here. So we're going to quickly go over the different alts within the market, and then we'll finish off with some questions here. So on XRP, we are still seeing that 1478-ish zone hold for a nice level of support. We were thinking of a potential reverse head and shoulders, but as we can see, we're not really at that point as of now. On the 4-hour, holding our zones very well, support, resistance, and we're getting a nice downtrend here. So we could just draw a nice little descending zone connecting the lower highs, getting a squeeze in price, as we can see. Bit of a squeeze, and then we'll put a projection on there as well to show that it's a zone, not an exact line on a chart. So we got that area. If we do break the descending zone and then come back around here, retesting the previous resistance as a new level of support, it may not look like much but just support to resistance, we're looking at 8-9%, everyone. So if we're able to risk 2-3%, that's a really solid risk reward. So that is what we're wanting to be looking for a potential. Like I said before, BTC is going to be the market leader, so we're really wanting to ensure that we are looking at that. Just looking at potential ascending zones, we could see one right there. I'm not really going to be drawing it in. I think the better opportunity here is to be looking at the horizontal zone and seeing if that breaks, because that's going to be the main thing that we're going to be looking for within the market. So that is a structure that I'm going to keep for the XRP trade. If it does break below here, we could be testing these lows yet again. So I wouldn't be too surprised if we get another dump to maybe test a potential double bottom here, maybe not all the way down to the wick, but maybe at least down to the candle closures, which would then be, again, another solid move, looking at around 17, 18%. If you're even risking 3, 5%, that's a great risk reward. So we've got a couple opportunities here. I think the downside move is a little bit higher probability because we're making a lower high, squeezing towards a horizontal level of support. Wouldn't be surprising if we did break back down. We are forming already lower highs. We are forming higher lows like so. We've already drew this in, but maybe we'll incorporate that within the price action. We're forming higher lows. So we're getting a squeeze within the market here, and it's just a matter of which way the price is going to go. If it does break to the downside, we are definitely going to be having a higher probability of at least coming back down for some level of a reward of potentially maybe 12, 10%. So if we are able to manage our risk to a level of 2, 3, 4%, would be an opportunity that we would be interested in. So very similar structure to Bitcoin, but that is how I'm viewing XRP at this very moment. Maybe lower this just a little bit lower. So that's basically the overall outlook for XRP. We're basically at the lowest point here, so we're not obviously looking for a major instant pullback here, because as we can see during other market pushes to the downside, we see some level of consolidation, you know, you see some level of consolidation and then you get a push up, but some level of consolidation and then drop lower, consolidation. So you're getting these consolidation points right here. And we're still very early in our consolidation. We've only seen 2 candles after our consolidation. So we're going to try to be patient here. We don't want to jump too fast into a trade. But we also do want to take trades that are high probability, because at the end of the day, we're not going to make money if we don't take trades. And no matter what, we're never going to have 100% certainty in any single trade. We have to take that risk if we do think that it's a high probability situation. So we don't see it right now, but in that said, we will go on to the next pair, which is going to be Link. So personally, I haven't been looking at Link too much. Just that massive dump to basically $0.001 scares the absolute shit out of me if I'm even entering this. So I've been kind of steering clear until it's giving me some price action where it's giving me a little bit more stability, because I do not want to have anything like that happening to me ever. So at this point in time, I'm being a little bit more cautious and not really entering Link at this point. We're just in a range from around $2.80 to $1.70-ish. Just stuck in a range here, so I'm not really going to be doing anything right now. Obviously, it's an absolute massive range of like 68%, but that's currently all I see in the market right now. I could draw some higher lows here and some lower highs in that same similar squeeze, but you know, if we see a similar structure with XRP, BTC, I don't want to be entering something that just had a move that went to literally $0 I'd rather just wait until it settles and I actually know that there's fucking buyers in this market before I jump in and enter. So XRP is going to be a better option in my view, because I just don't want to deal with Link right now in terms of that. I didn't get burned or anything, but that's the stuff of nightmares if you are longing or anything. So don't want anything to do with that. I'll just wait until Link has been provided. Link has provided me with enough price action and enough validation that I feel more comfortable with trading that again. So that's XRP and Link. We're not going to discuss too much more into that. BNB and EOS is going to be the next trades we're going to be looking at, or next pairs we're going to be looking at. They're not exactly trades, but as we can see, we've been doing the exact same thing for a lot of these pairs here, where we're having a descending trend line connecting the lower highs. There's not a whole lot more to do in my view in terms of the price action. We're keeping it very simple. We're just using key zones that we're seeing on larger time frames, and then using smaller zones to create areas of squeezes. We can see right here BNB, we see our anchor point right here. We could probably honestly push it actually up to this zone, so we see a resistance turn into a support, and we see 1, 2. So overall, this does look like a potential play. Now, we don't want to obviously assume that this is going to be a support that holds instantly. We want to ensure that there's going to be buyers within the area, but we can see that there's climactic volume. There's a shit ton of buy volume coming in. More buy volume than we really had in all of 2019. As we can see, this was the high, not even close to where the volume was within the market when that dump happened. So just shows that there's a lot of demand here. We could draw a horizontal zone. We can see there's a level of support right there. So that's a confluence zone within itself. But the main thing that I wanted to create is we can see horizontal zones very easily. But the descending zone that's very well respected was a little bit harder to see that I was able to identify. We see our anchor point right here. We see a level of interaction right here. We see another level of interaction right here. Obviously, there's a support right here, another level of support right here. And that's basically all I'm going to draw. Oops, that was the wrong one. I'm going to keep that one. But that is 1, 2, 3, 4, 5 interactions, and then now we see our 6th interaction within that same zone, giving us a validation that there's some level of sensitivity within the current range that we're seeing around $10.50-ish cents, kind of around here, $7 to $10, let's say. But now that's the daily. We've kind of understood that there's a level of support here. You know, we could draw on the 4 hour some descending zone to connect the lower highs. In my opinion, we could see maybe something. Let's just see if we're able to connect. Not even close to where we're able to do it though, or to able to have that price touch that area. So not really something that is ideal. You know, the only thing that I could see that would be a descending zone would be something like this, but no real confirmation, only 2 touches, so I'm not going to be looking at it too much. So at this very moment, we're just seeing a descending zone, and we know that this green support is a descending support that's been well respected throughout history, holding it 5 times. But overall, I think BNB isn't the best opportunity for a potential trade because it's still a little bit messy. We do have that strong level of resistance, which was a previous level of support around that $13, $14 range. So that is definitely something to consider. If we do retest that zone, that could just be a lower high coming back down and retesting this zone again. So overall, we are squeezing kind of, but unless we get into around the $12.50-ish cent range, would be a potential short play to come back down here. At this point in time, it's not looking like a phenomenal trade that I would want to be looking to enter in right now. But, you know, make sense of the current price action on the hourly, but it's not really giving me huge indications of a really high probability situation. So I'm just not really going to be looking at it right now. Next opportunity is going to be EOS. Let's just look at the horizontal zone that we currently see within the price action. I can definitely say I'm going to move that up like so, and then just extend it. Definitely a very easy zone to understand, and then we're going to incorporate that final area, that low, as we can see with that low right here. So we're in a range. Basically, we're almost at the lowest point here for EOS, sitting around $1.60, $1.70. So we can easily see we're now within a range with a resistance around $2.20-ish, and then a strong level of support at around $1.70. So knowing that we're close to the resistance, this, in my opinion, looks like a little bit better of a short, in my opinion, more than a long. We could draw a nice little trend line. It's not great. You know, if we look at the 15, maybe it's a little bit better of a view. I think that's a better option for where the trend line is. It's actually not looking bad for a short at this point. Put that like so. And then that has, actually the other one has to be green. This one has to be green. And then we're going to put our horizontal zone like so. And then what we would be looking for is a break below this zone. We put a stop loss above that little miniature high like so. And then we'd be wanting to take profits at these lows here. So that would be a potential opportunity for us. We'll look into it. And we also see this trend line connecting those lows as well, creating even more of a confluence for the sellers. So that could be a good opportunity. I will be looking at, I will post that within the Performante Premium members list for people who do want to trade this. I'm just going to refine that a little bit. But I'm pretty happy with this potential trade. You know, it's not a perfect ascending zone, but it's still pretty well respected. But I just see a potential double bottom coming here. And that's a phenomenal trade if we're able to get that. If we're able to extend it to the second bottom, candle closure of the 15-hour chart, 20%, like my God, that's a crazy trade. And you're only risking 6%. That's some great risk reward parameters. So we'll see how it goes. EOS is looking like a better position in my opinion than BNB. For me, that's a better trade, so I will be looking at EOS as a potential. And that's about it. The final chart we are going to be looking at is going to be Ethereum, which we'll just go to the 4-hour and look at the overall chart. I'll just move that here and then push that a little bit along. So on the 4-hour chart, pretty simple. We see a resistance around $138, key level of support with candle closures, and a type A wick closure at 105. So we're now just within a range, just consolidating. We are seeing higher lows coming in at the horizontal resistance, same as BTC. So we're holding a level of resistance. If we're able to make a higher high and a potentially higher low, that could be a little bit more of a bullish indication. Other than that, we are potentially looking for a failure to create a higher low, and then we'll create a lower low, and then we'll like to enter in the lower high to potentially make that double bottom with a failure to the upside. So we'll see how it goes. We are seeing a reduction in buy volume. That previous candle was a no demand if this next candle is bearish on the 4 hours. So it's looking a little bit more bearish. We see another zone like so, not obviously perfect. I think that's going to be the zone that I'm going to draw like so. And then I'm going to put a projection. I think I could go like this. Anchor point is not ideal. It's at a counter closure on a doji, but you know, a lot of these price action patterns do look pretty similar. So we're just trading the structure of the overall market basically at this point. So we're not seeing a failure yet. We see a nice little level right there that we could use as a nice support, which will fail, resistance, and then come down here. So that is the opportunity we have, and this is what I will be looking for as a potential trade right here. Stop loss above the previous market structure high, somewhere around there. And then we'll be looking for a take profit probably at the $102 range. So looking at a 2 risk reward, if we extend it to the candle closure is 2.7, so that's pretty ideal. If we reduce our risk a little bit, that would significantly increase our risk reward, but kind of the minimum we're looking for a risk reward would be that. So like a 2.2 risk reward would be something of a 2. Maybe 3 or 2.4 would be kind of the minimum that we would be looking for this potential trade. So we'll see how it plays out. We've kind of discussed the outline of the potential trades that we are going to be looking for. Ethereum looks good, EOS looks good, XRP looks all right. I think EOS or Ethereum would be a better option, or even BTC. So those are going to be the trades I will be looking for this upcoming week here. So I'm going to put, I'll just leave Ethereum here. I'm pretty happy with it. So that's basically the trade that we're going to be taking. We're not going to get too into it here. I think also I'm going to look at the 15-minute chart before we actually end this, just so I can refine the zone a little bit more, so I can see it on a smaller time frame. So we did get that anchor point there, nice. That's good to see. Yeah, I'm pretty happy with the zone. It's definitely a little bit messy in terms of the anchor point, but in terms of the rest of the trend line that needs to be validated, it's looking pretty good. So that's basically the overall outlook for the trades that I'll be taking. We'll also incorporate this trend line into my analysis as well. So now we got a nice little squeeze here because we've got a descending zone and an ascending zone, bringing the price closer together. And then I'm just going to maybe even attach it to this one. Let's just see how that looks. Yeah, that looks all right. And then I'll make like here. And then I'll put a projection to go above the zone. And then that'll be red. So we got a very nice squeeze here in the price, and we're just basically going to be looking to hopefully maybe long. If it does break towards the upside, we will want to see the price break the $136 range for XR or for Ethereum here before, in my opinion, we want to look to really take it long. But let's do one more zone here just at the very top, and one more kind of mid-range zone at the bottom right around here. So that's XRP, or fuck, Ethereum, my god. Not drinking enough coffee, clearly. Give me one moment here. So we'll see how it goes. That was the crypto market update. I hope you enjoyed it. We will timestamp it within the video after the live is complete, so people are able to kind of jump to whatever chart they're looking at, and then assess the price action that way. So then you don't have to just wait through it. You know exactly if you're looking for just a gold update and SPY, a particular coin, then you can just jump right into it. So that was a good market overview. We will now go into the questions. We didn't get any questions from YouTube, so now we will go dive in straight into the TikTok questions. And that's basically going to be the end of this video. We don't really have a whole lot more to talk about. We talked about the news. Definitely a lot of things going on, but Sunday will be very interesting because it'll be Monday for the markets in China. So we'll see how Bitcoin reacts here. So now going to the questions on the TikTok. Thank you everyone who has been on the TikTok live here. Gonna get a little drink of coffee and then we'll go over all the questions that you've answered on the TikTok. So first question by Habib Ben is, how do you make money? With 4 question marks. How do I personally make money? I trade in the cryptocurrency market, so I look for volatility. I don't care if it's going to the upside or downside. I'm looking for high probability situations where the price is going to have a high probability of either moving up or down due to me understanding a set system and criteria in which I have an edge or I have a probability that I'm going to have a certain outcome appear more than another outcome, which is either going up or down. So I test strategies. I've been testing strategies for a while, for years, and then you come across a final strategy that A, you feel comfortable trading, B, you can easily spot, and C, you actually have a strategy that is able to make you money. And then the second hardest part is actually being disciplined and having the ability to stick with your plan and stick with your rules to actually implement and use that strategy in its intended purpose. So trading is pretty systematic. You need a lot of patience, you need a lot of discipline, you need a lot of self-motivation, you need a lot of perseverance. But if you are interested in, like, not mind puzzles, but if you're interested in doing difficult things and thinking about many facets of the globe in building a relationship with not just price action and volume, but like building a relationship with so many different facets of the world, I find it very interesting. If you have an interest in economics, if you have an interest in any sort of trading or like understanding world economics, I think you'll find it very, very interesting. So basically, to answer short, that's how I make money. I use volatility to capture profits, just gaining percentages, putting capital in, taking capital out, and then I make profit in between. So not every single time. As a trader, I do lose money as well. It's a part of the game. Hi, hello Lee. Is this the news? Lol. Yep, this is the news. We went over the news at the start of the crypto market update. And then Dave Anderson 5 says false injection to the system. I think you're talking about the quantitative easings or some other money printing monetary system that they're using to try to stimulate the economy. I'm trying to look at what I read here. I don't exactly know, but yeah, a lot of economies are printing a shit ton of money. The US, because they went into national emergency, already got a fund of $50 billion just to use for the coronavirus. And because it's a national security, they're able to print basically as much as they want in order to try to help ease the pain and try to stimulate the economy. But they're going to have to print a shit ton of money. You know, there's a ton of people who will not go to work and they can't make money. They got car payments, they got mortgage payments, they got credit card payments, they got student loans, and they can't miss a payment. They can't miss a paycheck. And there's a lot of people in that situation. So the government will have to step in, and how they will step in is basically just printing more and more currency to try to stimulate the economy. Lowering interest rates will not do much. They're already so low. Like, what is 0.5% of interest really going to do to the everyday American? Are they going to go think, wow, interest rates are down another 25 basis points or another 0.25%? Oh my God, I'm now going to go buy that flat screen TV, or going to buy that car, going to go out more to eat at restaurants, or, going to go for a drive and go for like a nice drive with my friend. Like, that isn't going to matter to people that much. So in terms of interest rate cuttings, I think they're all out of ammo, or they're close to out of ammo, because everyone's kind of assuming that the government is going to go to zero interest rates sooner or later, in my personal opinion. You already see many countries around the globe already hit negative interest rates, and Trump is already putting pressure on the Fed to stimulate the economy, to lower interest rates, even go negative interest rates or zero interest rates. So they're already talking about it. So it's already in plan. They just need that extra push, that leg down, that momentum more to the downside for them to start acting in a more aggressive way to try to stimulate the economy. So we'll see how it goes. It's a very interesting time we're living in right now. Confidence drop, regain, and loss. Pulling out until economy strains. Confidence. Don't know if you're talking about stocks or crypto, but in terms of confidence, yeah, like overall, every single asset basically, the people are losing confidence. In the short term anyways. Like, you see a drop in gold even when it's the most well-known safe haven asset, right? But obviously, treasury bonds are just blowing through the roof. People are just diving into these very low yield T-bonds. And that just shows the pessimism within the economy, because no one's really wanting to buy back in a way. And a lot of people are rushing to treasury bonds, even when they're at these all-time lows of yields. Like, who wants to make 0.8% 10-year yield? Like, that's fucking so bullshit, but people are still diving into it. So that just shows the pessimism within the overall market through investors, and it will be interesting to see how it all plays out, because if there is an increase in inflation, people are going to be rushing out of the dollar into gold and potentially BTC, so that will be a huge shift if it does occur. So we will see how the market goes. We'll see how the market reacts. Triggers, ghost buying, companies fishing for money, so you lost a lot then. Once you bottom, nowhere to go but up. Yeah, that's very true, but it's obviously hard to determine where the bottom is going to be. We have indications in terms of technicals to try to understand where the bottom is. We're looking for areas of support that we're holding. We're looking for potential higher lows and higher highs. We're looking for breaking of resistances, holding of supports. We're looking for no supply candles. We're looking for volume accumulation, not volume distribution. We're looking for increasing buy volume, decreasing sell volume. We're looking for things that indicate that the bulls are now coming and taking charge. Breaking of descending zones, holding of ascending zones, all that stuff is coming into play. We're looking for a lot of things. We're building a relationship with the price action, with the volume, and the overall sentiment within the market. So that's our goal, to see how it's going to bottom here. We haven't said it's going to bottom yet. There's a squeeze currently within the market, but we don't want to put a bias. We want to let the price action speak for itself and let the price action decide which way the price is going to move. And we'll just trade. We'll let the market lead and we will follow. So we're not going to try to lead the market. We're not trying to exactly predict it, but we're trying to let the market take that first step, and then we'll see which way that first step is taken. And then got more questions here. Give me one moment. It jumped pretty quickly down. We got a lot of people to join, which is great. We got 18 people here. Okay, so then now towards the next question, we got P. Dookie with a rocket sips coffee. Yeah, great info. Thank you. Yeah, no problem. We're happy to inform you of any of the market conditions, market news, and market analysis that we're covering and kind of our opinion. Obviously, this is not financial advice. If you are active in the markets, always do your proper due diligence. Think for yourself. Don't be a sheep. Yes, it's good to take unbiased opinion from other people, meaning you can listen to what they say, but don't just listen to them and say, okay, well, this guy says it, so it must be right. Like, look into it for yourself and understand the reasons why that fact is going to be potentially valid in the future, right? So you could do fundamental analysis, you could do technical analysis, you could do on-chain analysis, you could do a bunch of stuff in order to try to understand the market, right? And finding levels of confluence in multiple systems is a great way to do it. But at the end of the day, no one 100% knows, and you gotta find your own system that's going to work for you, that you understand well. So that is a good cup of coffee here. Kid Livid followed the host. Thank you very much for that follow. Are you doing a BTC analysis? Yep, we already did a Bitcoin analysis. We cut it off already, so we